Hi everyone, I'm Ken from CryptoTradingKS. If you're new, a very warm welcome and welcome back CTKS family. Here you'll learn how to become fearless inside financial markets, to assist you to become more of a financial and emotional blessing to yourself and those you love. In this video, we're going to examine the health of the market, the macro factors, the stock market, and of course, the crypto market. There are a number of things that you need to be aware of. Please note that the lower boundary of the CTKS method service indicator for the DXY was updated just today. The S&P 500 upper boundary was updated today. Yesterday, the BNB indicator was updated from inside the service. And again today, BNB over the past 29 days has come up 30.8%. Well done, BNB. This is primarily caused by a massive liquidation of shorts. If you like the content, please subscribe to the channel and don't forget to smash that like button. All the indicators that I use on the daily video come from the service inside ctksmethod.org. Let's run the numbers. It's easy to look for simple answers in complex systems, but you'll find financial markets are amongst the most complex systems on the planet. The difference with our community, we focus on price reality. We always know the price is just moving between structural support and structural resistance levels. Price reality is either confirmed or denied as far as a trend goes by focusing initially on the Tier 1 charts. The Tier 2 and the Tier 3 are really important, but the Tier 1 are where you need to look at. If you're new to the crypto market, the stock market, the forex market, or commodities, a beautiful thing that we've done is to put all of these Tier 1, Tier 2, and Tier 3 charts together on a cheat sheet. You can see the different coloring of the Tier 1 charts and the Tier 2 and the Tier 3 charts. We focus initially on the macro factors. When you buy something, it's usually denominated in a fiat currency because most of the trading globally happens in US dollars. We focus on the DXY first. When we focus on the DXY, if the DXY is weakening, it means that we can buy more for the same price. This typically drives commodities up and the indices up, as well as stocks, as well as crypto. But there's a lot more to it than that. We need to confirm the forex pairs against each other to try to understand where things are going. The yields become very important. You can think of the 2-year as your savings interest rate and the 10-year as your mortgage interest rate. Commodities tend to move inversely to the yields and also the dollar. And what we can see here, the US 2-year over the past 29 days is down nearly 13%. The US 10-year is down a little over 13%. Gold is starting to get going. It's a little over 3.3% up, and silver is slightly negative, down about 0.6%. I believe things could get really volatile over the coming weeks, and that's because of the structural levels on the DXY, the dollar yen, the 2-year, the 10-year especially. These have been coming down for literally 1 month. Also, we had a bit of bad news over the past 24 hours. The probability of an ease went down by 2%. That throws positive momentum into the DXY and dollar pairs, and also weakens the euro dollar and the Aussie dollar, and it throws positive momentum into the 2-year and the 10-year. What people typically think, if it doesn't happen immediately, it's not going to happen. This is a really big mistake, and it's easy to make. When we see this weakening of the ease factor and the strengthening and bottoming out of all of these particularly powerful Tier 1 and Tier 2 charts, just in this cluster here, we have to pay a lot of attention. Also, the fact that the VIX has just been flatlining it's been negative for the past month, is not good. The VIX is typically very spiky. And we have seen some volatility, but I think we're going to see a lot more. The thing that really concerns me is what's happening with Apple at the moment. Apple has been weakening, even though the S&P 500 had its upper boundary increased and is positive. The Nasdaq is positive. on the trend. You can see the trend is looking really good. The S&P 500 is nearly up 5%, the Nasdaq nearly 6% up. Structurally, they've done crossovers, so it's really good, but we must pay attention to the things that occur underneath the hood. For example, the stock market has been experiencing extreme greed. This is not a good thing. When things get too overinflated, yes, there can be a degree of upward momentum still inside the market. But when you're getting market leaders like Apple, it's literally over the past month, it's only up under 2%. Microsoft is actually about 0.5% negative. This is not what we want to see in a buoyant market. It's terrific that Tesla is up around 9% for the past month, Nvidia up a little over 3%. When you combine the potential bottoming out of the dollar and yields, remember price moves in a wave. And when we think we're not getting confirmation between the biggest stocks in the world and the S&P 500 and the Nasdaq, that is cause for concern. That's why I've had this on red alert. Also, when we look at extreme greed inside the market, that's not good. Crypto is not at extreme greed. To make a summary on this, we could say the DXY, the US 2-year, the US 10-year, and of course the Forex pairs, they all work together. They're just too overextended. We've seen gold bounce off very strong structural support that could also point to a geopolitical issue that we may not be aware of. If you're aware of anything happening inside gold, please leave a message in the comments. When looking at gold's price, we've seen a lot of upward momentum recently. When we pop on the indicator from the service, we can see that gold is seeking to get through all of this structural resistance. How important is this structural resistance? Well, gold has been trading from 1833. If we were to use recent indicative price levels, we could draw all sorts of things up, but this is drawn from 1833 with the standards-based methodology. That's literally covering nearly 70,000 days worth of data. These structural resistance levels, for example, at 2067, that's an important one. For gold to continue up, it must bypass the 2067 level. You can see these structural levels are very heavy. What happens when we have a fresh air gap? Price can move up very quickly, but when we have overhead resistance, the technicals indicate that's going to throw a lot of sell pressure into the market. And what we're seeing now is that gold is doing relatively well. The next thing to keep your eye on is this 2083 level for gold. The major indices increasing without Apple and Microsoft. That's not so good. Apple's coming under a lot of negative momentum. It really needs to turn around in the next trading session. It's vitally important. Over the past 29 days, Apple is up 1.72%. But if you look at what's happening on the daily basis, just at the moment, we've had a series of down days. 1, 2, 3, 4, 5. That's a lot of down days. We're not finding structural support, and that's a problem because it's there. Just zooming in to that recent price action, we can see that we failed to hold this 195.93 structural level of one support now turned into resistance. And we're starting to get below a lot of structural resistance levels. This is not what we want to see when extreme greed is ruling the market. Apple is an absolutely mega corporation. It's in excess of $3 trillion of market capitalization. And when we think of Warren Buffett's main investment focus, it is Apple. This means that we have some very big shareholders getting rid and divesting of Apple at the current time. Microsoft is a little bit healthier from a structural perspective. The markets have literally been going up and up and up. The reason that we look at the stock market and we look at Forex and also commodities is the crypto is a really tiny market. Total crypto market cap is only 1.603 trillion. That's a little over half the value of one single company, Apple. A lot of people think that the crypto market can just decorrelate from the main markets. Of course, it can't. That's why if we're getting risk-off measurements from the main markets, we must pay attention, but always make your own decisions on what you do, because everybody is different. Some people are holding for the long term, and of course, the probability of a bull market is really, really high. Let's have a quick look at total crypto market cap and the structural levels. Again, we're seeing things that we don't want to see. We've tried to surpass this $1.633 trillion mark many times, but price has not been able to get above it. Now we're sitting literally on a negative air gap, and this could be a big drop down, so something that you should be aware of. Of course, don't panic, just have spare cash to buy the dip. When you get negative momentum outside a fresh air gap, you can get something that occurs like that, so just be aware of that. That's why we must know where the safety nets and ceilings are, and that's what the CTKS method gives us. It's the only methodology to mark up all of price history, and it does it according to a standards-based structure. I have a very special gift for people who have not done the Masterclass and Level 1 and Level 2 standard certification. It's a near total scholarship for both Level 1 and Level 2 CTKS Method standard certification from ctksmethod.org. To get this scholarship, you'll need to do 3 things. Subscribe and watch 3+ videos, and those videos should be before episode 1000. Find one rule from each video and get the timestamp URL for that rule, as well as the text. The final step is to message me directly on X with your 3+ rules and 3+ timestamps. Bonus points if you do more than 3. Please get on to that as soon as you possibly can if you're interested in knowing where smart money buys and sells. This is knowledge not available anywhere else. It's based on inventions that I've made in my 30+ years, well, nearly 40 years inside financial markets, and that near full scholarship will end at midnight New Year's Eve, so go to it if you want it. Please make sure that you also get this free printable template from ctksmethod.org for the CTKS timing cheat sheet. This is literally your secret weapon to understand at a professional level how the market is moving. Timing is vitally important. We know the prices just move between structural support and structural resistance levels, and those levels are revealed by the CTKS method. Now that we've covered off all the background information, we can get into crypto. This is literally what you should be doing on a daily basis. That's if you don't want to guess and you want to know what's going on. The one thing that we can note from the crypto market, which trades 24 hours by 7 days a week, what a great market, is the the amount of total liquidations has skyrocketed. The longs are outpacing the short liquidations by literally 4-1, and there's been a very big increase in liquidations. Everybody was told a story about the Bitcoin ETF guaranteeing that Bitcoin would get strapped to that rocket and fly, and of course all the alts go with Bitcoin. But what happened? Price reality said, not so fast. There are issues inside the market. There's extreme greed. There's a bottoming out of factors that could cause the market to come down. If we don't look more broadly, we're just literally not aware of these things. And if you're not aware, the markets will mercilessly take your money. We can see from that total crypto market cap that total is under a degree of negative momentum. It's sitting on that negative fresh air gap. That is not good. That's not what we want because we go long at spot. Let's have a quick look at Bitcoin. Looking at Bitcoin's price action over the daily basis, this may be a little bit confusing as to where the structural support and structural resistance levels are. That's why we pop on the indicator. The first thing that we notice, Bitcoin simply couldn't manage to get conceivably above the $43,946 level. This level was consistently rejected, and now we've seen negative momentum enter the market. This makes a tremendous amount of sense. We know that Apple is weakening. Microsoft is basically just down slightly, is flatlined. The VIX has been asleep for a month. The DXY, the US dollar currency index pairs, are just all overextended. The US 2-year, the US 10-year are looking like they want to party. Of course it's going to throw negative momentum on the stock market as well as crypto, but it doesn't mean it's going to do it immediately. These things can take time to play out inside markets. Taking time to play out inside a market doesn't invalidate it, it just means it takes time. Well done to everybody who fills out the cheat sheet. This is literally your secret weapon on understanding the Tier 1, Tier 2 and Tier 3 charts, the structural levels and how everything is moving across Forex, commodities, the indices, stocks and crypto. It's just incredible. And it's best of all, it's free to do. You can just pick up your printable template from ctksmethod.org. We've seen BNB go absolutely nuts in the past 24 hours. Over the past 48 hours, BNB's indicator from inside the service had its upper boundary increased twice. BNB has been going parabolic, and that's largely because the shorts got liquidated. When looking at BNB, we can see that we've had a huge surge up, and because of the markets, the weakness under the hood, things are starting to retrace. But where are the structural levels, support and resistance? Let's pop on the indicator from the service. And this marks up all of price history, literally 2,300 days plus worth of data. We can see that BNB had enormous trouble getting over this 299.70 mark and also the 301.30 because we got rejected there. That failure to get through upward resistance, those ceilings, has forced us back to the floor at 287.90, but we're not keeping it, at least not at the current time. Knowing where the floors and ceilings are on anything that you trade is vitally important, especially when there's negative price momentum. You must know where the safety nets are or you'll be freaked out. Financial markets are incredibly complex things. Your attitude will determine your altitude, not only in life, but your bank account as well, when it comes to trading and investing. If you blame, you'll lose the lesson, the learning inside the loss. If you stay inside zone 1, which is the panic zone, or zone 2, which is the blame zone, apart from being horrible places to live, they don't help you financially, and they never have. Instead, getting synchronized in with the market through learning, doing the cheat sheet, knowing where the structural support and resistance levels are, will take you into zone 3, where you can make money. But keeping it is the key. That's why Zone 4, Positive Excellence, is key. Understanding the doom cycle is really important. Anytime we get an unexpected negative outcome, of course we get upset, we get hurt, we get angry. This is normal. But if you push that onto an uncontrollable external source, you're creating a victim mentality. The only way to become a victim is to blame. When we blame, we become disempowered. Blame doesn't solve losses, it compounds them. It's a really big problem. How we do one thing is how we do all things. If blame takes over your life, it will affect every single facet of the diamond of your life in a very negative way. It's important to know the darkness before we can go into the light. When we have awareness and understanding that financial markets just cause problems. Financial markets are incredibly chaotic. When we focus on learning, our own learning, when we drop blame and we pick up responsibility and ownership for what happens in our lives, we are maturing. Blame is always immaturity coming out. To make money inside financial markets, we must be mature. Being mature doesn't mean being mean to yourself. You need a lot of kindness because the markets are crazy. If things don't go your way, just say, better next time. Focus on what comes next, not what has gone behind. Focus on empowering yourself. You do this by understanding the rules of the market, by getting into synchronization and knowing where the structural support and resistance levels are. You will always get losses inside financial markets. That's just one thing that occurs. If market conditions change and you do not have dry powders, there is nothing wrong with selling. Selling a portion or selling whatever you're comfortable with. You have to make the decision. When it comes to maturity, you understand that only you can press the buy or the sell button. Nobody else can. This is why doing our CTKS code is so totally vital. We must be able to control our emotions. Think about where the market could go, how in sync or out of sync we are. Always understanding that price action always moves in a wave. It can go down in an uptrend and go up in a downtrend. That typically confuses most people who are just beginning. Always remember, you control the trade or investment, but the market controls the return. You must know your structural levels. And it's best if you learn how to put the structural levels in yourself. That way you're empowered. Always keep a positive excellence attitude and just say to yourself, if you take a loss for whatever reason, just be kind to yourself. Maintain your inner peace and your outer peace no matter what. The markets are merciless. If you don't learn from the loss, the market will hand you the loss again, and next time it will be bigger. This is why the markets force us into learning. A lot of people say, no, I'm right, the market is wrong. How can the market be wrong? The market will always give you price reality. We must embrace the reality of the market. That's the mature and only thing that we can do. It does take a lot of strength to do this, and that's important because your determination and your confidence built from knowledge will fuel your strength. Your kindness to yourself will facilitate learning. Your persistence and commitment will give you courage. It's so vitally important to do your timing cheat sheet each and every day and just make a note of when you do it because it's important. The markets change very, very quickly. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.